I'm gonna put something together real quick because YouTube was giving me a fit yesterday, saying that the videos are taking too long to process. So I was having to re-upload them to try to overcome it. So to avoid the time constraints on that, I'm just gonna put this on X and see what happens after that. Our weekly chart. We have a buy sign, bounce, sell sign, efficiency here. That's where we traded down into. I wasn't overzealous that much this week. Could it have went down there? Sure. My focus was primarily on the daily chart first at this level. So I mentioned this here in the order block level. We'll look at that in the lower time frame in a moment. Then we had this buy sign, bounce, sell sign, efficiency. Remember, guidance was given on Sunday before the market opened that we would open up, trade up into this volume and bounce and trade lower for a swing trade idea. So that means what? Not a day trade, not a short-term trade. It's for a few days. It's going to at least go to the big event-driven economic calendar, and that's Wednesday FOMC right here. Personally, I think that we've made the low of the week. Unless proven incorrect in that idea, I think that we are most likely going to try to make an attempt to touch or explore back in here because we've fallen off pretty good, and we have a really nice respect of the consequent encouragement level of that weekly BISI. We've already given back a lot of the range already for FOMC. So I think that it's reasonable to anticipate trading back up into this lower portion and watch this wick yesterday. So this wick, consequent encouragement, half of it basically. It's also an agreement with Tuesday's regular trading hours, opening range gap, consequent encouragement, and the lower octant. See that? This line right here. So there's several things there. I think that that's a reasonable expectation to try to aim for if it wants to keep going higher. But simple caveat. Whenever there's a large range day, and yesterday was the largest range day of this week, whenever that happens, trading in the morning session can be troublesome for a brand new student, someone that's trying to study. They're going to be met with some frustration. So we're going to hurry up and get down to lower time frames. After trading down into the weekly BISI here, we entered back into that lower buy side and bounce sell side efficiency in the form of a suspension block. Made our way all the way back to the high of it. Here's our trading average opening range gap low. For Tuesday, here's the high of it, and consequent encouragement of that Tuesday opening range gap is here. It's also, again, as I stated, that this is the lowest octant on that daily buy side and bounce sell side efficiency. In addition to, it's also this portion here, that's the wick of the daily for Wednesday's trading I was telling you about. So about midpoint of that is in agreement with this level here. So trading back up to here is within the realm of possibility. Big sell-off, standard two-stage delivery, meaning that at 2 o'clock you get a run. And 2 o'clock on Wednesday. There. Okay. So 2 o'clock we run up to go down. Okay. If it would have went down, then we would have went up later in the session. So it's 2 o'clock until they wrap up the conference call. And because it's the first time this new Fed chair had the microphone, we can see everything's still the same. Nothing's different. So I'll be looking for a potential to run up into here today if it can muster the momentum to get up there. A lot of people are seeing this and they're calling crash and burn for the economy, and I think they're going to punish that. I think unless proven otherwise, I think we probably have the low of the week here. And I'll stand corrected if we get post opening range this morning. My focus is trying to draw still up to here. Okay, anything back in here, it'll probably bang around a little bit, but ultimately I'm looking to see if it can get to this level once more. Good morning, folks. Welcome back. All right, so this is a weekly chart.